Beach with great trades. I love helping everyone out, answering any. And today we're just going to go over simple support and resistance trace. The reason why I like this is multiple built in over the averages, and I use gives me a nice draw. Sometimes people draw them on just the scale they're looking at, and it's just not enough information for real levels. And my retracement, and I go 1 year, which you can see it's up here, and I go from the very high, already on TD Ameritrade, it already for you, so 33, so I'm close there, so I'm trying to get right on. And then okay, and you can see these levels are drawn. Being said, you can also see that it's built, the Fibonacci follows that trend. So the lines are going to line up. See that where it had resistance, all broke that resistance level. It broke the second resistance, actually broke the third resistance. It topped out right here at 33. And see, it fell way back, which actually what it should have done here, because typically what happens when it gets rejected, it'll come back and then go back up. But for some reason, there's been some kind of catalyst that sway up, and then of course it retracing back to these support lows. How do we use this on a regular basis? Is simply just that. Let's say we're trading right now on the daily chart. Trade because it's a longer time frame, but if you did, what we see here is we're under this 50-day line. Again, video as part of this series called #study. This episode resistance and support levels. We have two things at play here, and we have this Fibonacci resistance level. These are telling me that this is not going to break through this. If I were looking to trade this, I would, because it's probably going to this area and again as a kind of like a slingshot, if you would, some kind of like slinky or something, where when it hits the top of the resistance, it tips back, recharge to shoot up again. Breaks right here. This is where a lot of people tend to buy, and it retraces and well, that was like a lot of effort. So I think of it as a living thing, as a lot of effort, took a lot to get through that, to take a, and then push through it again the second time. Okay. And you can see it's through a certain section and then it has to come back. It's through a section. So that's why these levels are so important, as far as where do you want to buy and where do you want to sell. If it showed then here, the problem with this reversal on the day is it basically hits the top again. Now we're playing so tightly in this top bottom resistance, you don't really want to play. You are the way people play these is they want to play the breakout. So you don't want to play in the break to pull back again. We break through again, and then we'd look for like a 28.61 resistance, and then in that range. This is one we can pull up any of these using the SPR. Us. You see, I already have these ones drawn out. With these ones, they're actually 2, 64, 45. Like I said, sometimes it's hard to get. So this is a good looking chart here. Broke through this resistance level at 76.26. We're going to look for a little bit of consolidation, and then 79 be what we'd look at for an exit strategy here, because that's the next resistance. The cool thing about before, whenever it hits a high, this is would be its 50-week high, and it pulls and it consolidates a little bit, it's going to try for it again. This would do resistance at some point. However, once we break the thing about Fibonacci retrace, it will give a broader range. And from my experience, that 100% mark, it will load. Now we're stuck. All right. It gave us a 30. I'm trying to get zoomed out further. Even the weekly doesn't show us what I want to see. Back to a time frame is what I want to see. Typically, if we can retest the 100 mark, which is right here, and break it, it's very, very common to get to that 100 mark, which in this case would be 88.76. So that's a huge gap right there. That'd be a huge breakout. It doesn't shot, but if it can break 79, since that was its 52-week high, and it can break it and stay above it, the next 80. So Fibonacci, very simple to use. Personally, go from 1 year down to the 52-week low. Okay, 52-week high down to the 52-week low to get these levels here. And then from that point forward, I know where my support and resistance is. So I have a good idea of, if it breaks a support level, to sell. Okay, so if it breaks a support level, it usually go down to the next support level. If you want tight stops, then typically, you'd want to set them for a couple cents below. Something like this one right here, 96 was the support, and you can see again here. So what did it drop below? It actually dropped to 70 cents. So if you would have set your stop just below 71.96, you would have been stopped. Of course, it recovered some, but it's better than sorry, depending on where you bought in. You're buying right here at this resistance level. That's not where you want to buy. On the confirm, meaning like what you can see by this green candlestick here. So I wouldn't buy here. I wouldn't buy here. I would buy order for 71.96. You would have caught that bounce. That would when you're trading and you're not a long-term investor, meaning you're holding stock more than a year, if you're not paying very, very close attention to your money and your trades, it's very easy to lose sight and lose money, and try and play the catch-up game. You don't want to play emotional. You want to play exactly what the technicals or fun or the way you like. Then you're waiting for a certain bit of news saying the hype, sell the news because that you're waiting for. You know, technical waiting for analysts waiting for earning. Text traders are also looking at things like distance, and fundamental traders usually don't look at these levels. However, this will enhance overall if you do. If you're a fundamental trader, you know. But if you're waiting for news and that news pops, that's your time to sell. But the problem is people get emotional. They think it's going to go higher, 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 and then they never sell. And then you can see that when things fall, they fall fast. So it took 2.5 weeks to go from 3 to 79, and it took 4 days to fall all the way back down to 73. So when you do that, it happens very, very quickly for these pullbacks. And if you're not ready for them, you're going to be selling at a loss. So anyways, guys, I hope this information helps always. And I like this on any questions you might ask. Helping people understand technical analysis. Personally, I trade momentum trades. If you watch my 1-hour master class, you'll see exactly how I set that up. All the links are below for Facebook, books read, and all that good stuff. So if you have any, I'm happy to help. And I hope everyone has a